After the bell today, we have NVIDIA earnings, and I am a shareholder of NVIDIA. I have 42 shares. I bought this back in the. I'm really, glad that I did. I bought this back in the big sell-off that we saw a few months back. In fact, NVIDIA has actually kind of been in this range-bound market. I know this stock, of course, seems like it is a monster stock. However, it's actually been in a range for the last few months and finally really started to break out, it seems. However, with earnings after the bell today, NVIDIA has some high expectations. We got to talk about this because if you are somebody who trades indices, you may not realize how important today actually is. If you trade the NASDAQ, the S&P, the Dow Jones, all of these things, actually with NVIDIA joining the Dow Jones, by the way, all of them are very much impacted by NVIDIA's after the bell earnings today. NVIDIA is trading currently at $147 per share, $147.50 when the stock market opens up in 5 minutes. But it is here's my opinion on it. The tech trade, right? If you want to talk about technology in general, we could pull up XLK, which is a technology sector ETF that I like to look at, has not been doing as well as some of the other ones. Some of the really dominant sectors have been financials, for example, banks and financial services companies, even regional banks. If you take a look at KRE, regional banks have been flying to the moon, right? Shout out to Atlanta people. We got Truist, right? Truist, actually, what is Truist's? Truist TFC. TFC's up and away. Another local bank is Regions Financial, right? Over in Birmingham. It's a bank that I use. Reason I point this out is small regional banks are killing it because, of course, what? Well, the idea of a return of Donald Trump benefits a lot of areas of the market that enjoy environments that are less regulatory, right? Or policy that is less regulatory heavy. And Donald Trump was known for that in his last administration. And it is the reason why many names, including Bitcoin, are skyrocketing, because the areas that are less, if there's less regulation, less push for administration of what's going on in the business world, many companies benefit tremendously from that. They make a lot more money. They specifically for banks, there's less restrictive stuff on merging and acquiring other companies, buying companies. IPOs might come back full swing, right? If you get new companies coming onto the market, these are things that banks can administer and make a lot of money from. Regional banks also could benefit from buyouts from bigger banks, etc., with less regulation restrictions. They love that. So my point is, long story short, the financials, XLF is an ETF I like to track that with. Financials are up and away. But meanwhile, technology has not been doing what it's been doing for the last few years, which has been massively outperforming the rest. So I think that's worth mentioning. However, long story short, with NVIDIA earnings after the bell, here is my opinion.
Our Black Friday sale is almost over. This was our best year yet at A1 Trading. In 2024, we brought the incredible Chris Pulver in and gave you guys access to all of his trades and analysis through Pulver Alerts. We also introduced our newest market scanner, the Stock Box, whose AI algorithm is scanning each and every day to provide you with bullish or bearish biases on the top stocks and stock sectors from around the world. Not only that, but the Stock Box gives you a behind-the-scene look at what the largest hedge funds in the world are buying and selling through the 13F scanner, so you can keep up with what people like Warren Buffett or Steve Cohen are adding to their portfolio. The best part of all, both of these products are on sale now for a massive 40% off during our Black Friday sale event. The stock box, the edge finder, pulver alerts, and the VIP Discord community, as well as our trading view indicators, are all on sale for 40% off. Again, the sale is almost over. This is the absolute best discount of the year, hands down. So if you want to take your trading to the next level, don't miss out on the 40% off Black Friday sale event. You can find out more in the description below. Again, 40% won't last forever, so take advantage of this huge sale. Stock box, edge finder, pulver alerts, VIP Discord community, and trading view indicators, 40% off right now.
My opinion is the market needs tech to continue to drive things higher. Technology is such a huge component to the S&P 500, to the NASDAQ. I mean, the NASDAQ's like 40% tech or something. It's something close to that. So technology needs to be strong. If you're going to see the NASDAQ take out highs, you want to see technology lead. Now, part of the reason that Dow stocks and S&P stocks are doing so well is because those financials, right? Big financial companies, JP Morgan, right? Take a look at JP Morgan. JP Morgan, right? JP Morgan up and away here recently. A lot of bank stocks just really driving higher. Bitcoin also a huge beneficiary of less regulation. And we clearly know that with Musk and Trump both being sort of pro crypto. I think right now in the short run, that is the driver for these things. I know it's especially driving it right now because look, the correlation between these two things, which between stocks and crypto, which has historically been very high, seems to not necessarily be as strong currently. In fact, let's test that theory, guys. Let's do a quick test. We're going to go to a correlation coefficient, and we're going to compare Bitcoin to the NAS 100, the NASDAQ, right? Let's do this really quick. So if I go NAS 100 and correlate it to Bitcoin, check this out. What we can see here is that if we scroll out, what you'll notice is that a lot of the time, let's do a weekly chart. A lot of the time, there's a pretty positive correlation between what Bitcoin is doing and what the NASDAQ is doing. Most of the time, these two things sort of move together. However, in recent times, we see Bitcoin and the NASDAQ's correlation weakening a bit. It's something to keep an eye on. The reason I say that is that Bitcoin charging through the highs here today, meanwhile the NASDAQ slightly in the red, is impressive. It shows just how resilient this crypto rally seems to be. I am long. I am gracefully and thankfully long because this thing is, well, let me brag for a second. Bitcoin is absolutely ripping here today. It is floating my P&L wise just about $43,000, which is an insane amount. And I will say this, and I say it every time, for me to capture a trade like this, please understand that there are also trades that I take that are minus 4,000, minus 5,000, minus 4,500, right? Minus 6,000. The reason I indicate that is because I trail stops, and the payments that I have to pay in order to trail stops are small losses over and over. I know $4,000 is not a small loss. I understand that. I'm not trying to sound, like that's a small amount to me or anything. That's still a large amount. However, the account has grown over the years. And for me to capture trades like this, I also have to take losing trades and losing streaks and downside. I always point that out because it is easy to, as a content creator, do something disrespectful to your audience, which I think is to gaslight them into thinking that this is the everyday thing for me. It is absolutely not. I really wish I had more trades that look like this, but currently Bitcoin is going crazy and it has become my best trade of the year. If I were to close it right now, this would be the largest trade that I took this year, which is exceptional. It's awesome. I wish I had 100 of these every year, but I do not. So just wanted to add some context because it is really important that when I show you this, I'm not just shrugging it off as nothing. This is one that I have paid for by taking many losses before this in order to finally catch the good one. Bit of a a sell-off here happening in the NASDAQ, down 0.45% here this morning. S&P 500 also down 0.36%. Dollar index is also stronger here today, up about 0.5% as well. Saw a little bit, looked like the dollar was getting tired up at this 107 level, but we'll have to see. I mean, today's candle already starting to look bullish, like it may want to come back and retest this. We never even made it to the 38.2% retracement before buyers are at least trying to come back into the dollar index. Let's see what else. The yen, dollar yen, pound yen, up slightly here today. Dollar Swiss up slightly as well. Let's take a look at yields also. Yields are, this is a daily chart. Yields are up here the last several months. Going back to September, we bottomed out on yields. What's interesting, guys, is that just when the Fed started cutting rates, what happened to yields? They shot up. And if you are someone new to fundamentals, it is understandable why that might sound really confusing. So you say they cut interest rates, and yet yields, which largely track the bond market's expectations of future interest rates from the Fed, start to go up. Seems a little confusing. Well, the reason is because the yield world, the bond market, is trying to figure out going forward where on the next 10 years, what kind of yield are you going to get from treasuries holding long-term US bonds? Well, it's gone up because US economic data has been largely stronger than expected. And inflation expectations have also ticked up a little bit with Donald Trump coming back into office. Well, he's not in office, but his return in January has market participants a little bit concerned about, okay, all these tax cuts, all these tariffs, what is that going to ultimately do to inflation? Now, I'm not necessarily saying that I think inflation is going to go skyrocketing. I'm just pointing out that the bond market clearly does think so. And that's a fair statement because you know what is also a fair statement is that the stock market pumped on a Trump's return because tax cuts and less regulation are perceived as just strong for the stock market. So it's a fair thing to say that inflation ticked higher, likely because of the strong economic US data, as well as the uncertainties and expectations that tariffs, if introduced in a stronger manner, could be inflationary. It's probably why the dollar index is up. Well, it is the reason. If you have yields jumping, it's probably the same forces that are driving the dollar higher. So we'll see. Nas down 0.5%, S&P down 0.38% here today. Bitcoin up 2%. Look at this again, kind of defying gravity here. Bitcoin is up 2% on a day where the stock market's down. Just showing the resiliency of this crypto move. I mean, it looks really strong. I say that, and I also just want to also reiterate that I am trailing a stop loss, which means that I'm not diamond handsing. I'm not, fingers crossed, close my eyes and hope we reach 600K. That's not what I'm saying. I'm just pointing out that right now the price action looks beautiful on crypto. Bitcoin looks amazing. You've got a breakout here happening after a huge breakout, right? It's breakout after breakout. And all I can do in these scenarios is just hold tight to the strategy, which is trail that stop, let this thing take me out when it's time to. I don't know how far this crypto move wants to go. It could go to 120K. And if that happens, what am I going to do? I'm going to trail behind higher lows, right? I'm just going to trail until eventually it takes me out. Because again, I would be lying to you if I told you I think I know where this thing's going to stop. I have no idea where crypto stops. Right now, conditions look favorable to Bitcoin. I like the fundamental story, right? I'm long. I'm trailing stops. When the move is over, the market structure breaking will be my signal to get out.
Speaking on patience, look at this positioning on euro dollar that I've got. Man, it's taking some patience to hold this. So essentially, on euro dollar, if you guys have been keeping up, you've been missed, bro. I appreciate that. Thank you. I put a video out on my channel yesterday, basically covering euro dollar because it's basically the only thing I'm actually paying attention to at the moment. So you can see I've got, I think, 8 positions here. So the positioning is very small. It's all broken up into 0.1 lot sizes, so it's nothing crazy. But obviously it's just to mitigate risk. I don't want to go in with just one lot here. I'd rather break that up into sections and make sure that my exposure is I'm going to say regulated, but obviously regulated by me. It's all managed, and it's all safe to essentially just hold and not worry about, because there's no stop losses. I've got to take profits down here just above parity, which, you know, I'm not really targeting the parity level. If anyone doesn't know what parity is, that's essentially just the 1 level on euro dollar. So let me show you on the daily. So if euro dollar reaches 1 or 1.0, that essentially means 1 euro is equal to $1. And that's normally a big red flag within the Eurozone that there's some sort of issue there. So that's why I'm not really looking for one, but of course we're paying attention to it. So in terms of short-term targets, I'm now just watching this 1.05 level to break. And once we get that, I am expecting an inflow of short sellers or bears into the market as we break this huge key level on the daily time frame. And then once we've had a bit of a lower push from 1.05, I'll look to close out and get out and secure my profits. And then if we do see, you know, the global macro continue to indicate that we might hit parity, I might start repositioning it again short side. But for now, I'm not trying to be greedy. 9F1, definitely not long. I'm probably the opposite of a long position right now. Layered in a lot of shorts. But yeah, as I said, this is all completely managed. It's just small lot sizes in multiple positions with no stop loss and a hard take profit. But so far, the position couldn't be any better. It's been range bound for the past couple of days, but overall, very, very good. So the other thing I've been looking at is mean reversions. Now, mean reversions aren't something that I trade very often. It's not something that I would come onto a webinar or a stream or whatever and say, I'm going to trade this mean reversion. But it's interesting to look at right now because a lot of the markets, especially the dollar markets, are very, I'm going to say overbought, oversold, but use that word loosely because I don't believe that overbought and oversold actually exists. We just have very extended markets. We'll go over gold shortly. I'll just finish this topic and then we can move on to some chart requests. So if we look at what the dollar's been doing, let me change this to candles so it's a bit easier to see. The dollar has been stuck on the 107 level of resistance since when was this? October last year. So over 1 year, we've not been able to breach above or even hold above 107. And we've just rejected again on Thursday. So, you know, last week, very, very recent. And now we're coming back up. You know, we did see some sellers come in, not really anything substantial. And now it looks like we're seeing the buyers come back in. So another part of euro dollar trade is paying attention to what happens when we reach this 107 level. Are we going to break it or are we going to reject again? Obviously, if we reject again, I might start looking to book some of my profits because I'm not looking to hold this for a long, long time. It's more something I'm looking to hold into the end of the year, at which we're basically at now anyway. So yeah, anyway, back to this mean reversion thing. If we look at euro dollar, it's broken out of the 200 Bollinger Band. We've got the dollar NOK that briefly broke above and has failed to hold. We've got the dollar CAD that's broken above, and we've got euro pound that is struggling sort of around this. So just briefly, I'm going to explain why a Bollinger Band is important or why you would want to pay attention to it. It's nothing complex, you know, it's a standard indicator, just like a moving average or an RSI. It's not any secretive holy grail or anything, but it can give you a very good idea into what the market could potentially do if you're willing to hold over a long time and maybe even DCA or even martingale. Which, you know, just to clarify, I don't condone. I'm not saying you go and martingale these trades because it can blow accounts. But if we look at the Bollinger Band, it essentially gives us the average price of the asset or the pair, whatever we're looking at. In this case, it's euro dollar. So we can see price typically stays within the Bollinger Band. And we do get situations where we just melt down and continue to sort of reject and continue to move down, which might be the case here, but we do normally see rejections off the bottom. So it's a good way to say, okay, well, maybe I don't want to go and sell euro dollar right now. Maybe I want to wait for a pullback and then I can get short. You know, there's lots of ways to use it, but it's something I'm just paying attention to. There's some technical red flags with a lot of the dollar pairs, although the macros are very, very good for short positions. See someone saying they're short New Zealand dollar. I'm also short New Zealand dollar, so I'll show you what positions I'm in. So I'm short New Zealand dollar here. I'm also short on silver, which is in actually some drawdown right now, but it's completely fine. I'm happy to stay in this one. I remain bearish on this. I actually think Nick called this one out yesterday. And I'll be honest, full credit to Nick, because I wasn't really paying attention to this. Again, I think it was Nick. I might be wrong. It might be someone else. But gold has broken down quite heavily recently. And essentially, it stopped at a place, and this is going to sound a little bit newbie, I guess, but it stopped at a place I don't want it to stop. It doesn't seem like it's a level here that's major enough to warrant a huge inflow of buyers into gold. So essentially, what I'm looking for is a continuation of the dollar strength and a continuation of profit taking on gold. As you know, I've been speaking about this quite a lot as well, that the reason we've had such a strong gold run this year is we've had the US elections, which caused obviously uncertainty of investors, driving inflow to safe haven assets. We've had global tensions, Russia, Ukraine. We've also had the Middle East. And we've had essentially global rate cuts. Not so much now, but at the time of gold's huge rally, we had Bank of England, European Central Bank, we had the Fed, we had, who else was there? There was the Swiss National Bank as well, and a few others all cutting rates. So again, that was causing a bit of an inflow into safe havens. And now a lot of those things are done. We've had the election. Trump seems to be doing what Trump does so far. Obviously, he's not really in office yet, but we are seeing the dollar strength from the Trump trade, and the Fed seems to be sort of relaxing a little bit now, starting to sound a little bit more hawkish. So the thing with gold, and also if we just have a look here on the Edge Finder, I'm fairly sure it's nudging towards a bearish reading. Yes, yeah. So we've got it's still neutral, but it's a -2 score. So it kind, I mean, you know, it's not enough for me to now go and start selling gold, but it's a nice little sort of hint that gold's massive bull run might be slowing down towards the end of this year. So let me just have another look at this. So James, I'm in New Zealand dollar short at the moment, running 1% profit on a 2-to-1. Will NVIDIA earnings be able to reverse this or have an impact on this trade? No, I wouldn't say so. I wouldn't worry about the NVIDIA earnings. If you are concerned, just trail your stop. But yeah, I don't imagine that being a huge impact, really. Your thoughts on JPY pairs, James? That's another interesting one. So where is it here? So I've been looking to go short on pound yen. Now I'm not doing it because it's not developed enough. In terms of, I'm not super happy with the way the fundamentals are for this position, although technically it does look bearish. You know, if you're looking on the daily, we've got a lower high here, we've rejected previous structure. The 200 daily moving average is bullish in my opinion, but yeah, I mean, it's not really anything I'm looking to trade right now in terms of currencies. The yen is in a danger zone. So here's some source for you guys. And I'm sure this is very, it's very general information, so it's not really source. But some of you will know and some of you won't, that an intervention is basically done by the MOF, which is the Ministry of Finance in Japan. And it can cause very brief, very quick chaos in the markets, but that doesn't normally last long. But if you are involved in an intervention, or if you're caught up in one, it can be very messy and you can lose your position within seconds. And for me, that's just not something I'm willing to do. Bearing in mind, an intervention is just noise. It's not something you can really time. I mean, you can get a rough idea of when an intervention is going to happen, but it's not something you can time perfectly. And it's not something you can really trade around. So it's a case really, at the moment, I am expecting an intervention. And the reason I say that is because the previous intervention, which was right here, and this is when we saw the start of the unwinding of carry trades, and we saw that really brief flash crash in the markets, that was all initiated by an intervention. So it was very successful. And then what's happening now? Well, we're reverting back to the pre-intervention level down here at sort of the 62.24. So if we're looking at what is the MOF trying to do, and they're not trying to change the trend, but they're trying to slow down the depreciation of the yen. So if it's coming back down to the previous levels, well, it should be a given that they will be looking to intervene. And again, I don't know when. I could say this, and in 6 months' time they intervene, or it could be tomorrow, or it could be later today. Really, no idea. But it's just something I'm not super happy with putting my capital on the line for at the moment. Which again is another reason actually I was looking to maybe go short on pound yen, trying to get into the intervention. But again, it's very difficult to time, and I'm just not really sure I want to take that risk. Hi James, why is yen generally weak every time? It's weak because there's nothing to support it. So there is no positive factors really for the yen at the moment. So if we look, let me just pull the information up so I don't get it wrong. Just give me a second. Let me find the right source here. Can I go full margin gold sell? I'm emphasizing my conviction. Well, if it doesn't sound like you're very convicted if you're asking me, but I would never recommend anyone go full margin. So let me pull this up. Why is the yen weak? Where is the data? Here it is. So Bank of Japan is looking to hike in December, but it's not really enough. So their interest rate currently is 0.25. If we look at what the interest rate in the US is, it's 4.625. So essentially, and obviously this is more, again, relatively basic stuff, but if you're looking to trade, you want to be trading interest rates. It's a very, very key and core part of fundamental trading, because interest rates are a heavy driver of the markets. So if you have a currency like the yen with an extremely low interest rate, and you have another one like the dollar with a significantly larger one, obviously relative to the yen, you're going to want to buy that market. So essentially there's nothing really driving buyers towards the yen. Even GDP in Japan is lower than the US. The labor market's better in the US, and so on and so on. So that should answer the question, really. It's just not, there's no reason to buy the yen. Hey James, how GBP is connected with geopolitical tensions? That's quite a broad question, but can you clarify which tensions you mean? Do you mean Middle East or Russia, Ukraine? Essentially, I'm going to answer it in a more of a broad way, I guess. But if we're looking at what's going on, the geopolitical tensions, it's essentially war. Even if there's not actually a war technically happening, it's still driving the same amount of fear. So you have what are typically just two classes in trading. You have risk on and risk off. So when we have something escalate, whether it's whether it's Ukraine getting missiles or sending missiles, whatever it may be, or it might be the Middle East starting to escalate, it drives investors to be a little bit fearful, taking money out of risk on assets like the GBP and like the euro and putting it into things like the Swiss, the yen, the US dollar, gold, and so on. So that's obviously that in a brief nutshell. So we can generally see the pound start to lose value in those situations. If we look at COT data here, so essentially what this is a longer term picture of what smart money's doing. So when I say smart money, I don't mean the ICT kids. I mean the real smart money, the people sat in the big ivory buildings with hundreds of millions. So it's important to pay attention to, because then we can get an idea of what they view the market as. So we can say, okay, well, they're very bullish on the South African rand, or they're very bearish on the Canadian dollar, or they're neutral on the S&P, for example. But this is just an overview. So if we go down here and have a look at, someone just said the Japan 225, so we can have a look at the Nikkei. We can then say, okay, long contracts have increased, so they've added positions into, they've added long positions into the Nikkei, and they've decreased shorts. So we can say, okay, well, smart money's looking to buy. They've closed out of their short positions. Their net positioning is bullish. The net change is bullish. So overall, that's how you would use smart money. It's more just to get an idea of what the big boys are doing. So if we move now onto the chart for the Nikkei, so Japan 225, we can say, okay, well, if smart money's buying, technically we're now heading into 200 moving average. We're touching into support. I don't actually know what else is going on with this market in terms of the macros, to be quite honest with you. But just following what I've just said, we could quite easily start planning a long position here back up to the previous highs. I mean, obviously, this is very sort of surface level trading, so please don't now just go and full port buy the Nikkei, but that's generally how you would go about using it.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.